Hello, this is Mike Swanson. You're listening to the Wall Street Window podcast. Now, usually I have a guest on this show, but tonight, Monday, March the 2nd, I just want to talk with you myself because I have one message I want to give you, and that is do not panic over the coronavirus. 6 people have now died in the United States. That's the news this afternoon. And every now Monday, Wednesday, and Friday, the Centers for Disease Control in the United States releases updated data about the situation. And now 6 people have died. About 100 people had actually contracted the disease. Over 50% of those people, though, have done so outside of the country, then were brought into the country. So we're talking about 50 people, 6 deaths, and it's a limited situation, and there's no reason to panic. For one thing, you or me, anyone else listening to this, is more likely to die from something else, just leaving their house, getting in a car wreck, falling and slipping on some ice and breaking a hip or something. You just can think of 100 different ways you could pass away, and only 6 people in the entire country have died. Do not panic from this situation. In fact, this is not just me saying this. This is the Surgeon General of the United States. So let me read a statement by General Dr. Jerome Adams, the U.S. Surgeon General. This is what he says, quote, "I want folks to understand that we knew this was coming. We told folks that this was going to happen, and it is why we've been preaching preparedness from the very start. Caution is appropriate. Preparedness is appropriate. Panic is not." And he is absolutely right, and I have no reason to doubt him. And I've had people who've contacted me via email and other ways telling me that I needed to take steps to get ahead of the curve in things I thought were crazy. And I'm not doing any of what they told me. But I think preparedness is appropriate. And how do you prepare? As you should do every single year in the wintertime, because that's the season of the flu, and that is wash your hands. If people are sick, don't hang around them too much. Just use your general smarts and wits and pay attention to what is going on and wash your hands. And that's the best defense you can have against this coronavirus or any other virus. And seasonally speaking, these things tend to peak out this week every single year, and that's probably what's going to happen. Look for this situation to peak out this week, next week. It's already peaked out in China. I don't care what people like Kyle Bass say or Stephen Bannon say, who are claiming that China is making up the numbers and they're in a bigger crisis, they're hiding it. Look, there are factories in China that are run by Americans and other people that are not Chinese, and those factories have reopened. If it was truly a nightmare situation, that would not be what's happening. There are people that have a bias against China and spread paranoia about what is going on there with absolutely no evidence to back up what they're saying. And it's time to stop the panic. And that's what I'm saying in this podcast. And as far as the financial markets go, consider this. The biggest global pandemic was the Spanish flu, the influenza of 1918. It lasted to the end of 1919. And 1/3 of the entire global population was infected by that pandemic. And 7% to 10% of those infected died. In the United States, over 600,000 people died between 1918 and 1919 from the Spanish flu. And you know what? The stock market went up during that time period. The stock market investors did not care. The point is, if you think that this virus situation is going to crash the stock markets, it will not. Even in your worst imaginations and worst fears, and the situation is probably nowhere as bad as you can imagine it may be. It's not. There's no reason in the world to think that this is going to be a repeat of the Spanish flu. Even if it spread to 1/3 of the global population, the mortality rate inherent in this disease does not compare with what happened with the Spanish flu at all. There is no reason to panic. The reason why people are panicking is because I think there is a vested interest among people on the internet and the media to do that, to generate views, attention, and clicks. And someone putting out a podcast with the title "Do Not Panic Over This Virus" is not going to get shared. It's not going to get the clicks. They'll be like, it probably won't even hit the algorithms. But I'll be a shot in the wilderness. Try to be a voice of sanity in an insane time in which people seem to enjoy being driven into panic and fear. Again, over the weekend, the CDC reported 24 cases. We're talking about 24 people. And let's assume that the worst case scenario is correct and that those 24 people represent hundreds, perhaps thousands of other people infected who've not yet reported to their doctor. Their cases have not yet entered the record books. Well, if that's what is going on, then this disease is not that bad. It's not bad enough to cause the people who are infected with it to go to the doctor and even ask for help. And that's the worst case scenario. 102 cases in our entire country. Now, we just step back and just think about what is happening with this situation. We're heading to an end point. Maybe you think I'm wrong. Maybe I think I shouldn't send out this podcast. Maybe you think people should be more concerned than what I'm saying. Well, if that's the case, I will be proven wrong by Friday. Because by Friday, the CDC will report new numbers Wednesday, new numbers Friday, and then there'll be announcements that we need to be in a state of general panic. This is the tipping point of whether the crisis is going to pass or whether it's time to really panic like people are telling you to do. I don't think it's time to panic, and I don't think you should panic, and just calm down, wait, and see what happens in the next couple of days. You do not need to go to the grocery store and just buy a cartload of canned food. You don't need to hide in your house. You don't need to cower in fear. The stock market went up Monday, big time. The Dow went up over 1,100 points. I don't believe the Dow even dropped because of the virus news. As I said, during the influenza panic of 1918 to 1919, in which 1/3 of the whole world was infected and over 7% of those people died. We're speaking of millions of people, 40 million people. More people died from that than they did in World War I. Over 600,000 people died in the United States, and the U.S. stock market, the Dow Jones, went up. It didn't matter. Why should it matter now? Why should we think it even made the stock market even drop? I know the media said that, but whenever the market falls, they always have to reach for an explanation, and that's the the easiest one to come up with. The real explanation, I believe, is that the market simply became overextended, and many people were buying things that shouldn't be buying. They had no game plan, or they went on margin or leverage. And then you get a downdraft, and such people end up selling. And we had forced selling last week on Thursday, an obvious margin call situation because the Dow had a rough morning after already being down 10%, then bounced in the afternoon, and then in the last 15 minutes that day it collapsed. That's margin-induced selling. It's the type of selling I haven't seen since 2008, but that's what causes that type of huge selling on the close. Now, the Federal Reserve is poised to lower interest rates 2 times this month, and there's going to be more rate cuts to come. And as the stock market stabilizes, people in the market are going to look forward to that situation to buy into. And if the coronavirus fear passes, then that's what everyone's going to be talking about on CNBC and these other financial chart channels. Rate cuts, rate cuts, rate cuts, buy into the rate cuts. Forget both those stories, and the reality is the U.S. economy softened towards the end of last year, and coronavirus or not, the global economy is likely in a recession. That's why the Fed Fund futures at least say the Fed is going to be lowering rates 3 to 4 times this year. It's not because of the virus, it's because the stock market dumped, much like it did in August 2007, April 2000, and this is a momentum-driven market. How many people do you know that buy stocks or own stocks have any clue what the PE ratio is in the S&P 500, much less the stocks that they own? Nobody does, because all they do in this market environment is react to price movements. If you know someone that sold last week, did they sell because they saw a news story about the coronavirus, or did they sell because they lost so much more money in their accounts and they got a margin call, they just couldn't take it anymore? It's price action that dictates the behavior of the investors in this market and nothing else. The news is just a side story when it comes to the stock market action. It's not a side story when it comes to our individual psychology, as all of us are who look at the internet, who look at our mobile phone gizmos or turn on the television set. And basically what has happened over the past week is every single case of an infection from the coronavirus of these 24 some people has been a news breaking special. So it gives you the feeling as if there is this snowballing event happening, because every time someone is infected, it's breaking news. Well, there is a flu season every single year, and we're close to 100,000 people or more in the United States catch the flu, and when that happens, not every single case has to be trumpeted on television as breaking news. It's not breaking news in my mind when 24 people are infected with this thing, and we're just in March, and it's going to be, the weather is going to be warming up now, and the flu season is going to pass us by, and we'll see. All right, maybe I'm wrong. Maybe I'm being too optimistic. Maybe I'm just not scared enough. We'll find out. We'll find out by the end of this week. And if the situation says we need to be scared, I'll tell you, I was wrong. We need to be scared. But I'm not scared now. I don't anticipate being scared. And just step away from it when it comes to your trading, when it comes to your investments. Don't get caught up in the news. Don't trade to trade virus news. Just stick to the charts. Obviously, the Dow got smashed last week, fell 15% roughly. Quickest drop in that space of time we've seen in years. A counter trend rally at the very least is what you would expect, and we're getting it. Now we're going to get future rate cuts, and it's going to be a very interesting summer. And as I said, as a headline for a blog post last week, in reality, gold is the only certain thing in this market. And when I wrote that, I'm thinking not about an hour or a minute, turning on the television and seeing the gyrations. I'm thinking about the years to come. And that's the story for the future.